Hello, I'm Peter Whalen, sitting in for Peter Hall this week. The word exports bring to mind pictures of busy container ports, rail cars offloading different commodities, trucks crossing the border full of goods, and so on. Other, less visible elements of Canada's foreign trade are often forgotten. For example, there are the sales that occur in Canadian foreign affiliates around the world that don't get into the numbers. And there are foreign sales of services that are hard to capture, especially if they are digital. Then there's tourism. Hold on, that's not an export, is it? Actually, it is. Think of it this way, it's selling a Canadian experience, not by taking it somewhere else, but by bringing the customers to where the experience is. It's a very different kind of export, but make no mistake, it is an export. And it's a pretty huge export business. It may come as a surprise, but close to 28 million visitors entered Canada last year alone. Think that's impressive? Back in 1999, the number hit a peak of 49 million. The vast majority are US visitors, 2/3 of whom stay for more than a day. Think about the average spending of these visitors, and the direct and indirect economic impacts add up to a very impressive number. The contribution to GDP in 2015 was calculated at $20.5 billion. Believe it or not, that puts it in the same range as aircraft exports and foreign sales of Canadian electrical and electronic products. In spite of these impressive numbers, Canada runs a deficit on the travel account. Canadians travel elsewhere in greater numbers than incoming visitors for a number of good reasons. First, we are a northern country, and there's a significant southward migration to warmer destinations in the winter months. Second, we are a relatively wealthy country and have a high propensity to travel. Third, we are a trading economy on a relative basis, much more so than the US and other highly developed economies. As a result, business travel abroad is significant. In 2015, Canadian trips abroad exceeded foreign visits to Canada by 28 million persons. And as a result, net travel spending abroad was about $17 billion. The travel deficit is not always the case, though. Even in times when our trade growth has been strong, Canada has run a balanced travel account. From 1998 to 2002, more visitors came in than Canadians traveling abroad. The same was true through most of the 1970s and into the mid-1980s. In spite of the logical reasons for a travel deficit, it turns out the Canadian dollar is a very important driver of travel trends. Both of the balanced travel episodes were achieved during periods of currency weakening. Strengthen the loonie, as happened between 1988 and 1991, and again between 2002 and 2013, and the travel deficit balloons. The recent sharp weakening of the Canadian dollar is already having a marked effect. The visitor deficit actually fell by almost 10 million visitors last year, and if history is a guide, more is in store this year. What do the details look like? Travel by Americans to Canada is up 11.7% on a year-to-year basis, with a strong and steady uptrend obvious since late 2014. Same-day travelers are up 16%. It's not just Americans, though. Inbound travelers from other countries are up 8.4% compared with a year ago, and trend growth suggests there is more in store. On the flip side, Canadian travel abroad on the same basis is down 11%. It's all borne by travel to the US, down 15.5% at latest count. Travel elsewhere is up 9%. What does it mean? Well, clearly it's great for those in the tourism business, but there's more. Travel showcases Canada, whether from a business or personal standpoint. Visits can lead to significant follow-on business, whether or not there is direct contact with these visitors. Moreover, with the US bumping up against significant production capacity constraints, there's a chance that increased travel could well lead to inbound foreign investment activity. And finally, the fact that a cheaper loonie makes things easier for incoming business travelers is not insignificant. Shifting travel trends are a welcome development. The bottom line? Canada's weaker loonie is bringing in new travelers in droves. They come with money, but also pressures at home and ideas. It would be a good idea to observe and leverage this new opportunity. It could be lucrative.